Alright, hello and welcome to Camel Finance. I'm your boy Camel, and this week is going to be a big week. I've got some really nice charts to show you. I want to go through what we can expect data-wise this week, and then we're going to look at the technicals. It's bank holiday here in the UK, so the UK stock market's not open. I'm actually going to do some family stuff today, but I'll be back at my keyboard and my desk trading hard as of tomorrow. For me, the most important day of the week is going to be Wednesday the 12th, as you can see, because this is when the US CPI data is released. We also have Fed minutes on the Wednesday, March PPI inflation data on the Thursday, then we got consumer sentiment on Friday, followed by retail sales, and there are 4 Fed speakers this week. So this week is going to determine what the Fed does. Of course, if we have CPI coming in lower, which is kind of my expectation, although I'm slightly skittish about this readout, I wouldn't be surprised if we see some kind of higher number, even though I think the real data shows that inflation is coming down, but that is to be determined. But if, of course, we can get the CPI to come down, then it certainly gives the Fed more credibility to move to a pause in rate hikes, which of course is what the bond market has been telling us for a while, as I've been showing over and over again. You can see here, the CPI for last month came in at 6%, and we're currently forecast a 5.2% CPI readout. Now, if we can get anywhere near this number, I think so long as it's below 6%, anywhere near this number, and we will see the stocks and risk assets fly. Trueflation, which attempts to be a far more accurate real-world readout for the CPI data, has us on a 4 handle, as you can see here. So Trueflation collates 10 million plus data points. They have us significantly below last month's readout at 6%. So anywhere down in this neighborhood, and we will see the melt up confirm. I'll get to the melt up chart in just a minute. Make no mistake though, US personal savings rate has dropped to just 3.7% in 2022, which is the lowest since 2007. So even with inflation coming down in the short term, the damage has been done. The consumer is poorer than they've been in a very, very long time, since all the way back in 2007. And in the real world, many people are feeling the burden of this inflation. Whenever I cover inflation, I usually talk about making the distinction between CPI or inflation coming down in the short term versus what to expect in the long term. The key thing to point out here is that CPI inflation, it tends to lag by 12 to 18 months from the time the printing or the easing or the QE starts. So whilst the printing round from the C19 era has spiked all the way up into the end of last year and has now been coming down ever since, make no mistake about it, as I've been showing, the printer is back up and running, the Fed is continuing to expand its balance sheet, and therefore we can expect more inflation over the longer term. Here's an example in the 40s where inflation spiked, rapidly reversed, spiked, rapidly reversed, spiked, rapidly reversed, as you can see. And this is kind of my expectation for what we're going to see over the coming months and years. I expect whilst we're in one of these periods now where CPI is declining, I expect this to turn around sometime in the next 12 months and for us to get another wave of significantly worse inflation. But in the meantime, I'm expecting to see the CPI print come down. As that CPI print comes down, it gives the Fed more wiggle room to move to a pause in rate hikes, and I believe we will see the markets front run this pause in rate hikes and put in a massive melt up before they ban Congress from owning stocks at the top, just like they banned the Fed officials from owning stocks at the prior top. And then I think we get this big bust that everyone is waiting to see at the moment. If you're laughing at this idea, if you think this is way too bullish and you're sure of yourself that we're going to see a big 2008 style plunge, I'm not surprised. And the reason I say that is because this is where we are in the sentiment cycle, in the denial phase. We have had all of this. We have climbed a wall of worry to anxiety, we've had aversion, and now we are moving up into denial. As I said before, if we do get this lower CPI print and the market starts to front run this pause in rate hikes, expect to see us climb this massive wall of worry and return to confidence. Whether you agree with the bullish or bearish thesis is irrelevant, because the data is the data. A SPY monthly close at some point in the future above 420 puts us in a bull market. And what does that look like? That looks like a close above this local high here. Now, again, if you think that's insane, if you think that's not going to happen and we're certain to roll over, then just look at the NASDAQ, because the NASDAQ has already done it. Furthermore, in blue here is the triple Qs for the NASDAQ divided by IWM. The last time this ratio got up into this neighborhood, the S&P 500 went from a low of 2,600 to a peak of 4,800. And these are the exact conditions that we have today. So this sets up, in my opinion, a run to all-time highs. Where's my SPY chart? As I showed you here at the start, I think the conditions favor this melt up. Of course, as always, I'm open to all outcomes and we'll have to take it one day at a time. But furthermore, there's another under the radar stock market indicator that just flashed, suggesting there's more upside ahead. The December low indicator occurs when the S&P 500 stays above its December low throughout the first quarter. And again, this is what we've seen. If we go back to the December low, which is right around here, you can see we have not yet breached that low for the entirety of Q1 of this year. Historically speaking, this tells us to be open to better than expected outcomes in the stock market walking forward. Again, this week's going to be volatile and it's important to see how we close. Over in the Bitcoin world, have you noticed we are currently putting in a double humped camel pattern? In all seriousness though, the charts are starting to look very good for Bitcoin. As you can see here, 2012, 2016, 2019, and today. Now, I'm not saying that this is going to repeat, but I am saying I kind of expect to see it repeat. If we move over to a more zoomed out chart, you can see here that this current pattern suggests we hit six-figure Bitcoin, just over 100K, by the middle of this year. Now, again, if you're a long-time viewer of this channel, if you're more than familiar with this concept, I've been talking about this melt up and Bitcoin also putting in its top this year, forming part of a macro left translated cycle, meaning that we go up for 1 year and down for 3 years, as opposed to up for 3 years and down for 1, as we've always seen before with Bitcoin. So it was really interesting for me to see that Credible Crypto here has come up with a very, very similar idea, but he has arrived there via a completely different path. And this is exactly how I see it, followed by a 3-year bear market decline that catches the majority of market participants wrong-footed. Before then, Bitcoin will make its super cycle pump up to the 7 and 8 figures. So as I often say when I cover this idea of this early super cycle top, where the top comes in this year in 2023, this is right until it's wrong. If we continue to blast upwards like this, then it's right. But of course, if we were to dive down here, if we were to start basing and going sideways, then we can just scratch this one off and say Camel was wrong about the melt up. For now though, I think things continue to look quite constructive. As you can see, we are not that far off tracing this fractal here. Plan B stock to flow model seems to be looking more and more like we're going to revert to the mean. A lot of people were very angry about this model and insisting that it was completely broken and wrong. But as I pointed out multiple times, nobody complained about the deviation from the stock to flow model up here. Nobody complained about it when it deviated to the upside. It was only when we deviated to the downside that everybody seemed to think this thing was broken. Anyway, fast forward just a few months and you can see that we are rapidly heading up towards being back perfectly on track with the stock to flow model. Expect higher numbers in the not too distant future. And it's not just the technicals, because for Bitcoin, the fundamentals continue to improve as well. We have almost 1 million addresses holding over one whole Bitcoin, which is a new all-time high. As you can see here, the black is the price, the yellow are the addresses that have successfully accumulated at least one full Bitcoin. And you can see these addresses continue to make new time highs. Adoption continues to move up. Demand for spot-driven Bitcoin continues to increase. In other news, the Coinbase CEO has said the exchange is about to integrate Bitcoin Lightning Network. So very, very positive stuff. Just like addresses with whole Bitcoin, the Lightning Network adoption continues to thrive also. I found this and I thought this was fantastic. Large asset managers have their Bitcoin exposure. They've used MicroStrategy and mining stocks. And the reason I thought this was so good is because this is exactly how I like to add Bitcoin exposure via different instruments. We'll get to the charts in a minute, but understand this. They know what's coming and they're hedging themselves in a way that makes the most sense for them. They can't just outright buy and hold cold storage Bitcoin, because there's too many internal roadblocks for these businesses. The regulatory framework is simply not there to allow large asset managers to move in and buy and hold spot Bitcoin, but they can make the Bitcoin play via MicroStrategy and mining stocks. Just as they didn't reprice CDSs until they got the bad mortgages off their books in 2008, they're getting adequate Bitcoin exposure before they allow fiat to break. In the end, normies following conventional wisdom will be the ones left holding the fiat back. And so if we scroll down here and look at the top 10 owners of MicroStrategy, the company which, of course, owns around 140,000 Bitcoin, valued at around $4.17 billion. Take a look at the list. We've got Vanguard, we've got BlackRock, we've got Bank of America Securities, we've got Fidelity, Morgan Stanley. That old adage of follow the money, I think, applies here. So just before we move on to the charts, I wanted to point something out. In addition to MicroStrategy and miners looking good, looking like institutions have the same idea as your boy Camel here, Nancy Pelosi, one of the greatest insider traders of all time, has just added 10,000 shares of Apple. So that makes me feel very, very, very comfortable, very confident about my Apple position. Let's take a look at this right here. So kicking things off with Apple for once, we've got the breakout retest resumption looking for further continuation. If Pelosi is continuing to feel confident about this, then likely she sees the melt up ahead as well. Of course, she always knows something. She is an insider trader. Or perhaps, given that we've just recently seen Apple adding the Bitcoin white paper to their OS for their Mac computers, I wonder if there's about to be an Apple and Bitcoin announcement. Either way, long and strong continue to push on a technical basis, and I hope that the Pelosi news can fuel some further upside here. So looking for the stock market to continue, although I'm wondering if we're going to see reduced volume since we are on a bank holiday in the UK. That of course remains to be seen, but we'll be looking out to the end of the week to see if we continue to hold this upward sloping support line. The Nasdaq, I would like to see hold this local high from back here. And the Dow, I'd like to see if we can push back into the top of this cluster here. I'm going to zoom in a little bit on the VIX here because you can see I drew this little blue line. It doesn't really mean a great deal to me personally, but we had this kind of like bear flag which broke down and now looks to be retesting or recovering this. So this is to be determined. I expect a little bit of chop before ultimately pushing down into the lower teens as the melt up continues to validate. So one day at a time as ever. The UKX, the FTSE 100, is right into resistance, as you can see here. If I zoom out a bit for you. It's bank holiday today, like I said, so this market's not going to be open until tomorrow, but it'd be interesting tomorrow to see if we can get a breakout, retest and a resumption, and we can add a long back here. And notice that that re-entry will be below where we took the profit from on the initial trade, capturing this move here. So that would be a really nice setup if we can get it. Dollar continues to be under pressure, doesn't it? Here's the DXY. So not much more to say about this. I think a lot of people think that the dollar to the downside trade is crowded. I think a lot of people, based on my observation of Twitter and online, seem to think that this is about to rip higher somehow, and I'm open to anything, but if that's going to happen, really we need to get first out of this downward sloping red resistance line, then we need to try to think about breaking out of this downward sloping yellow resistance line at 105-ish, and until we can do that, then anything that happens in this sort of neighborhood is no man's land, and I would consider just a counter trend bounce within the context of a further downtrend. So for now, I expect to see lower numbers, particularly if that CPI comes off, then I expect to see the 90s, probably this week or next week, but as ever, one day at a time, and we'll let the chart tell us what to do. Yields still heavy, aren't they? So not really surprising, given that the Fed is likely going to be pausing its rate hikes in the not too distant future. Got a new trade call out well ahead of time for you, as I like to do on this channel. So here's a trade call out if you made it this far. I think we can long Nike here, something like this, and target higher up, if, of course, it can break out and close above this downward sloping red resistance line. So this would be a pretty similar setup to Apple or Tesla. You could enter here for an early entry, or you could draw a box around this top of the highs here and look to buy the breakout retest resumption of the top of this box. So we'll see what can happen here, but I'm lining this up for a trade. I'm calling this out well ahead of time, as I often like to on this channel. So if you want to get more of these trade setups called out well ahead of time, and if you want to see how I deal with this market in real time as a pro swing trader, make sure you hit that subscribe button and turn the notification bell on. Bitcoin, still doing Bitcoin things, isn't it? Still compressing. This volatility compression is going to lead to a massive move. Now, I'm concerned because if this move is to the upside, I don't care, right? Because I'm long, as you can see by my current long position. But if this move is going to be a move to the downside, then this move is going to be nasty. So I really hope that we can get some kind of upward momentum out of this, and perhaps we can get that. But whenever you see a squeeze in volatility like this, then it usually precedes a large volatile move. So Bitcoin's getting ready to do Bitcoin things, although I have to be open to seeing this drop. I thought by now we would have seen a drop into the half cycle low, something like this, that would have then resolved to the upside. So we still got to be open to that showing up a few days later than expected. But ultimately, I do think the trend is up. I do think we'll continue to do Bitcoin things. So long and strong, continue to push. Ethereum is kind of leading this time. So normally that's not a good sign, but maybe this is just a sign of things to come for Bitcoin over the not too distant future. XRP, as you can see here, still kind of, is this bull flag or is this a breakdown that's going to resolve lower? I don't know. But as I've been saying over and over again, I don't want to respect this trendline break like I normally would, because I want to give this thing the room to do something crazy like XRP has in the past. So I'm hanging in here. I am risking giving back a lot of profit. As you can see, I've already given back this much open profit. But I'm also keeping a keen eye out to see if we do some sort of distribution pattern, as I keep saying, and then we can sell the trend line breakdown of that, something like this. If that can show up, then we'll look to get out of the trade. But for now, long and strong continue to push. Let's see what the market can give. And then lastly, as I alluded to earlier by showing you this thing with MicroStrategy, we'll go through the crypto-related equities. So I think these things are going to fly. Now, Coinbase admittedly looks heavy. It is showing relative weakness, but if Bitcoin can come blasting out of the current bull pennant that it's in, then I expect to see this resolve to the upside thereafter. MicroStrategy looking significantly stronger, isn't it? So it probably wants to do something like this and get a breakout. If so, we can add a position there. We can move the stop up somewhere to here and let the profit from the first trade finance the risk from the second. So we'll see how that goes. Undoubtedly, MicroStrategy, when it gets going, is going to do insane things, I think. Riot still showing relative strength, still in this big, powerful uptrend, so not much more to do about from it. Try not to get shaken out in the near term. And Marathon undeniably putting in this sort of sideways consolidation. So if we can get above that, I think we get a big, nice run out of Marathon. But of course, all of that is dependent on Bitcoin getting its breakout. So as ever, one day at a time, volatile week. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn the notifications on if you want to continue to get updates on all these markets and how I deal with them in real time as a pro swing trader. In the meantime, enjoy your week. Take care from me. All the best. Cheers. Bye.